How's it going, everybody? I am here with VYFI, or Steven, the CEO and founder of VYFI. How are you doing, man?
I'm really well, thanks, mate. Yourself? Thank you for having me.
Yeah, no problem, man. I'm doing good. For people who don't know, what is VYFI and how did you get the idea to start it?
Yeah, absolutely. So, VYFI is an upcoming DeFi platform on the Cardano blockchain. We're doing a DEX, which is a decentralized exchange. For users that aren't aware of what that is, that allows you to swap between different cryptocurrencies on the blockchain. We're doing something a little bit different, which is we're building what we're calling the VY bar, or a bar, which is a distributive mechanism for our token, where we essentially collect fees that are generated on our DEX, and we use those fees to purchase back our token from the market and then distribute it to our token holders. And then we are building an auto harvester. Now, an auto harvester is a system that automatically liquidity mines for you. Now, what does that mean? When you provide different cryptocurrencies to different decentralized finance protocols, those protocols reward you by allowing you to essentially earn some of their token, right? So if I provide two currencies for users to swap between on our platform, for example, you'll be able to earn some VYFI token for doing so on our DEX. Now, what we're building is an AI system that essentially determines where there is the best value for your money to try and earn on these decentralized finance protocols, in our case on Cardano, right? So users that are new to the system, don't understand exactly how DeFi work, aren't really sure how to engage, or even users that maybe do understand how it all works, but want to just not think about a portion of their investment, much like an indexed fund works in classical finance. We want to have an option where users can just press a button and they're able to get engage with a host of different decentralized finance protocols at once. Now, what we've essentially done, which is different, no, we've done a few things that are different, but we're integrating our DEX, which is our decentralized exchange, with our auto harvester through our bar. So if you hold our token, you don't only earn the fees that are being distributed to you from what's being generated on the DEX, but you also get delivered a portion of all the yield farm that's generated from our auto harvester. So it's kind of, and this is a bit of a bastardization, but it's kind of a decentralized hedge fund, whereby you've got an investment device that's generating income, and the holders of that investment device are those that get to take advantage of the income that's generated.
So is it kind of like liquidity pairs?
It might not just be liquidity pairs, but yes. So liquidity in general, yes. Liquidity pairs, when you hold two different liquidity pairs on a DEX, this is already getting technical, this discussion, so I apologize. When you hold a liquidity pair on a DEX, you hold what's called impermanent loss. It's a type of risk whereby when users are swapping between lots of different tokens because their prices are changing, you tend to get dumped with the token that's losing the most value. Now, impermanent loss is, well, first of all, it's not new. It's a risk that has existed in liquidity pools since liquidity pools have existed. When banks were first doing currency exchange, they realized when the value of a dollar is going down, I'm winding up with a lot more of the dollar that everyone's selling. Why? Because I'm the one buying the dollar. So this is an old thing that's existed since banking's existed, right? The way in which it can be used, though, is it can be used as a hedge, right? It's not just a risk in the classic sense of, oh, I'm going to lose money. You can also earn money from impermanent risk. And let me give you an example of that. If I've got USD and Bitcoin, right? Now, my principal currency that I deal with on a day-to-day basis is, let's say, USD, because for most Americans, that is the case, right? I buy a liquidity pool with USD and Bitcoin, and the value of Bitcoin goes up. Now, what that means is people are buying Bitcoin off of me in the liquidity pool, and they're dumping me with USD. Let's say Bitcoin goes up by 50%, right? A rule of thumb is your value will increase by about 25%. So you're going to have about 25% more USD than you had before. So even though you've got less Bitcoin in there, your net USD value that you're holding, your impermanent loss, is plus 25% of your holdings, right? Now, in that circumstance, I like to call it impermanent gain because you haven't really lost. You've lost Bitcoin, which is what that's referring to because people have bought your Bitcoin, but the net value of your total holdings has gone up, even if you've got less Bitcoin, right?
Okay.
Now, you can use these. So that's an example of a good thing that can happen with impermanent loss, right? But essentially, all these impermanent losses exist between every token individually, right? So between every pair of tokens, they've got an impermanent loss that we can calculate. At any point in time, it's a mathematical number. What is the impermanent loss? What is the impermanent risk at this moment? We can use these calculations to essentially stratify them into a list, right? So we can say, these are the token pairs that have the most impermanent loss. These are the token pairs that have the least impermanent loss. And now if we look at the yield that's being offered and we compare that to the current risk, you're essentially able to make a optimized low risk pool. So which ones have low impermanent risk or impermanent loss, but the best yield? Which ones have got medium impermanent loss, but the best yield for that set? Which ones have got high impermanent loss and the best yield for that set? And then essentially we can get an AI to be redistributing these sets on real time based on real time market conditions, right? So you're permanently updating and looking at what the impermanent loss is between pairs and updating it against the best yield that's being offered.
And that's what your auto harvester is doing, correct?
And that's what our auto harvester is doing, yes.
And now with impermanent loss, this has always tripped me up because I've always thought, well, sure, if I'm losing, because right now I'm doing ADA min, it's the only pair that I'm doing, and it looks like I've lost money, but I may have because I don't understand it, but I would assume if I get more ADA, then I would lose min, but it should still balance out to be the same. And if I get more min, but I'm losing ADA, shouldn't that still balance out and be the same amount? No,
absolutely not. And the reason being is because the actual pool itself is tracking the value of the asset that you're holding, right? So whilst you're gaining min and losing ADA, the min that you're gaining is less valuable. So I like to use the analogy with classic currencies because it becomes really visible. You're a bank that swaps between Australian dollar and US dollar. Recently, the US dollar has been doing very well. So you start with, let's say it starts at 50 cents to keep life easy. So you've got 2 million Australian dollar, 1 million US dollar. And the US dollar is doing really well. So lots of people are selling Australian dollar for US dollar because that's what a currency going up means. Currency going up means lots of people are buying it, which means they're giving something else in return for it, right? So they're selling the bank the Australian dollar and they're giving out the US dollar, pushing up the value of the US dollar. Now, as the value of the US dollar goes up, let's say it goes up by 25%. So now we're at 66 cents, right? So at 66 cents, a little less, 64 cents, whatever. At that price now, I've got a lot more AUD, right? Now, instead of having 2 million, people have sold out and given me 500,000 AUD. So I've got 2.5 million AUD. But that 2.5 million AUD is now worth less than it was before, right? Now, this means you do have a defense. What you're describing there is the hedge that's built in because I've still got USD, right? So if I was holding AUD outright, in other words, if all of the USD I had was all AUD and I just had AUD and the AUD went down, I'd be losing more money because then my AUD is just losing value. What's happening in the liquidity pool? As AUD goes down, I'm gaining AUD and losing USD. So I'm still gaining and losing. I'm still losing something here because the value is still going against me, but I'm not losing as much as I would. Okay. And as I said, the rule of thumb is the hedge is about 50%, right? Gotcha. So let's say you held $2 million outright in AUD and it lost value, you would lose 100%. You would be impacted by 100% of that fall. In a liquidity pool, rule of thumb is you're impacted by about 50% of that fall. Okay.
So in my case, because min has gone down so much, it would have been better for me to have just held ADA. I hedged it in the wrong way.
But it's better than if you had just held min.
Right.
Right? Because you've still been earning min by that drop in min taking place.
Gotcha. Okay.
right?
Yeah,
One day, if you're ever interested, I'll come on and I'll do an entire program with you about the mathematics of liquidity pools. I can easily do a 3-hour lecture on it. We'll make it a bit more fun than that. But just do a deep dive into the structure of liquidity pools. I do think it's knowledge that's lacking in the world. Like, people engaging with this stuff don't understand how liquidity pools work.
100%. Yeah. Like, I had no idea. I thought, it's just a pool. Like, if I'm down on my ADA, I'll just get more min. It'll balance out, and I'm earning 50% on that. Like, awesome, right? And I've been doing that for like 9 months or 8 months or whatever.
Then you've been hit hard. Then you've definitely been hit hard, right?
Yeah.
And my general rule of thumb is I don't liquidity mine or provide liquidity to token pairs that involve the token that's being minted. Right? Now, that rule doesn't always necessarily work in your favor. I've missed some absolute pumps in Pancake. I've missed some I got all the sushi. And after the sushi pump, that's when I learned to avoid this, because then I lost it all in the dump. But essentially, if that token doesn't have a sustainable tokenomic underlaying it, right, that means that it doesn't have price stability. If it doesn't have price stability, supplying to a liquidity pool in a token which lacks price stability will very often end up in you getting more of that token that doesn't hold price stability, as the users that are earning that token drain that token from liquidity, right? Now, I should add a caveat to that. There is also cases where you can make a lot of money on a shit token, right? None of this is financial advice. I'm not saying do this, don't do that, right? You can also lose money on a great token. Right, that's a little bit how trading is. But in general, I found that rule keeps me fairly safe. That I just avoid the tokens that are being minted on any platform. Essentially, that's my little trading rule that I've looked after myself. So I manage a few funds in this field, and that one's always kept me alive.
Yeah, I appreciate that. So my next question is, where did VYFI start? And why did you create an NFT to go along with that?
VYFI started in my head about 2.5 years ago when I was playing with DeFi, and I just realized that there were a lot of tools and systems sort of lacking and integrations that should have been done. There were auto harvesters. So Yearn would be the largest auto harvester on Ethereum. You've also got Harvest Finance, Stoic. There are a few. But when we're dealing with these, with an auto harvester, it never made sense to me as why it was separated from a DEX. Why would you separate the function of liquidity mining from an automated liquidity miner? It didn't actually make sense to me. Now, the reason they did it, though, on Ethereum, the reason auto harvesters were invented is actually to solve a totally different problem. The reason auto harvesters were originally invented was because fees were so high on the Ethereum blockchain, right? So the way that you could, as a smaller investor, let's say you had one Ethereum, so a couple of $100, right? But you still wanted to engage with DeFi. The way that you could engage, because they're charging you $70 a transaction, it becomes impossible, right? But then they developed auto harvesters where they essentially grouped it. So they put it all together in a group, and they put all their money together, and then all the transactions were taken as a unit, so that you'd be charged one set of transaction fees, $70, for, let's say, $10 million of liquidity all going at once, belonging to thousands of different people, right? So this actual design begun as a solution to high transaction fees. It wasn't designed as a solution for new users to engage with the blockchain, right? So we're kind of adapting that approach, and we're trying to bring it into the Cardano network, and we're trying to say, well, here we want the focus is to simplify the user experience, and the focus is to bring in new users and allow them to engage with these systems. So these tools have been designed in other blockchains, but just haven't been designed in a manner that is going for what we're trying to do. Right. So that's where the idea of VYFI came from. It was me really sort of building on that concept of how do we integrate an auto harvester with a DEX. The NFT came into it by accident. So we did our ICO, And from our ICO, we gave everyone that was involved an NFT for free. We thought, fun little thing to give away to people. They might enjoy it. About 2-3 weeks later, we realized that we were able to build an NFT vault where you could stake that NFT for, I believe it was 60 days when we first did it. You could stake that NFT and you could earn some VYFI. So we thought, oh, this would be a really fun way to airdrop everyone that was involved in our ICO a little bit of VYFI. It's just a bit of fun, give everyone a little bit of a boost. Everyone loves an airdrop. But then all of a sudden, it was about a week after launching it, our NFT price spiked. So our NFT got to about, at the time, 200 to 300 ADA per NFT, which was, at the time, about $400, $500 an NFT. And then all of a sudden, we had projects approach us and say, hey, can we put our token in for your people to harvest using your NFT? And we were like, oh, well, yeah, of course you can. Why not? Go for it. And then that happened at the same, so we started launching a few other vaults at the same time, right? And all of a sudden we realized, shit, we're the only platform that has got a stakeable NFT on all of Cardano. This was last October. So NFT staking didn't exist anywhere else on Cardano, and we'd accidentally become the first.
Nice.
So we were like, oh, wow, that's amazing. And then our NFT just went bananas. It just went ballistic. It got to a point where one of our purple NFTs, the floor price was 4,000 Cardano at its peak. So there we are, total volume, floor price is currently 780. And yeah, a volume traded at 1.1 million, 80th, which is amazing. But if you look at all time, we had these spikes there. There it was, where it's just over 3K. Whoa. Someone bought the gold. Someone bought the gold for 11,000. Can you scroll down? Sorry, go to activity. Now I'm getting really excited. I do apologize.
Wait. It's a little bit further up. This is awesome. Where is it?
It's a little bit further up.
Activity. Oh my. That happened 6 hours ago? What? Yeah, there hasn't been any buy in the last 4 days, it looks like, but then, just 6 hours ago, a huge buy. So
yeah, huge buy.
Damn.
No, that's great. And that's the thing, we've only got 2,000 NFTs. So it's a very liquid NFT market. If you put one of our NFTs up there for 600 ADA, they'll get snapped up and, a shot, right? But it's not, we don't have, 300 being traded a day. That being said, the thing I find most impressive is that we minted a total of 2,000 NFTs and 1.3K of them have been traded in total, right? Which means that we've actually had a throughput of 65% of our NFTs have been bought and sold. And it could be one NFT being bought and sold 10 times between people that aren't holding, right? But in terms of transactions, that just gives you an idea of how liquid it's been since we've launched it. Essentially, if you had our NFT, you could have sold it.
No, that's really cool. And the floor price, these were handed out for free, right?
Yeah, these were all free. Everyone in our community got one for free. We just got very fortunate in that NFT aren't our focus. So these NFTs were never really made to be an NFT collectible per se. They're made as a utility engagement for our ecosystem, right? So what drives the value in our NFT is our ecosystem improving and building and continuing to do better. Whereas what moves NFT markets on a classic NFT project is very different to what we do.
Right. And this has utility. A lot of the airdrops that people do are just fun little artsy things to kind of give a pat on the back to investors. It's not anything too crazy, but this is actually, you would want to own this for multiple reasons, That's
absolutely it, right? There's many things, and we've also got more things coming with it. Also, one thing that I should add, on every sale of the NFT, we've got a 10% royalty. Now, it's a little bit high, but the reason we do that is because half of that goes to the bar, which is the distributive mechanism that I was talking about earlier, and is used to purchase back VYFI and then distribute that to our token holders. So every aspect of our ecosystem that we build is all being used to deliver value back to the token that underpins our ecosystem. And that's why I like to say that we're trying to build a sustainable DEX. So whilst we're liquidity mining and people can earn our token, we've essentially got these mechanisms that are sitting behind delivering real value through to that token that's then being delivered back to the users of our platform. And that's what makes our design very unique to base it. I don't want to say any other DeFi project because there are just a lot. So I don't want to claim absolute uniqueness, but I'm yet to see any that are designed like we are. Oh, and whilst you're here, actually, could you quickly go to Tap Tools? If you haven't, I'm about to introduce to you my favorite Cardano native token system. So if you go to in the search, just type in VYFI, just as an example while we're here. Now, this is a really amazing site that gives you a lot of information about the token. And we've recently had a bit of a buy up on our token, which is also really nice. But I highly recommend giving this site a bit of an explore. This is my favorite of the sites that track the value of Cardano native tokens, because they do it from all of the exchanges on Cardano. So they do it from Wing Riders, they do it from MinSwap, and they do it from SundaySwap.
And then this is the 4-hour chart. Let's scroll out.
Yeah, that's going back to when we were first listed on MinSwap. So we did a big drop. That was painful, but that is also life. The whole crypto market dropped. And recently we've just gone back up again, which is always lovely.
Yeah, that's a pretty big income or increase.
Yeah, we did about 50. We've done about between 40 and 50% in the last week and a half, which has been great.
Yeah, that's actually crazy.
Actually, so back to my original point though, which was the NFT project. And how it integrates into our system. Everything that it is that we're building goes back to our bar, which is where users are distributed VYFI for staking VYFI. And that entire ecosystem that we're building and every aspect of it that we build into the future is going to be designed to feed back to that bar. We are, on Cardano, we are definitely completely unique. We've got already quite a few tools that are functioning. So you can already stake NFTs, you can already stake tokens. We've got a lottery that's launching in a week and a half, 2 weeks, and we're going to be the first lottery on Cardano. Now, I'm not going to say that you're going to have great odds at a lottery. Lotteries are never great odds, but it is a lot of fun that we're going to be able to host the first lottery ever on Cardano.
That's actually really cool.
I would love to give a little sneak peek, actually. Here is the VYFI lottery. So we've had to design it a little differently because we don't have random number generators on chain. So the way that we do it is you purchase a ticket. I'll just quickly do a ticket purchase to show you an example. These numbers are not final, by the way. They're all still testing. You purchase the ticket. After you purchase the ticket, it comes up. You have to confirm it, of course. Boom. Confirmed. Transaction submitted. Now, that'll take a minute. I've already got 32 tickets here. Now, we essentially take 4 numbers from your transaction hash, and we can do up to 8 per ticket, and we convert those 4 numbers into a ticket for you, right? So 20F0, because I should add, transaction hashes are hexadecimal, and in hexadecimal, A, B, C, D, E, F are numbers. So these are the tickets that I have, for example, right? Once you have the tickets that you have there, I believe we're going to do it weekly. Every week at the same time, we essentially look at the block that's produced at that time. And when we look at the block that's produced at that time, we take the last 4 digits of the block hash, and they're the winning numbers for the lottery.
That's pretty cool.
So the block hash is random, of course, and it being completely randomized means that you can't force out any transaction hash before that to give you any kind of advantage. And then based on who won it, you get divided up the prizes. So in the last one, actually, we had 38 lowest levels that won 12 VYFI each. That's by matching the first. If you match 2, you get the second prize, which was won by 2 people. If you match 3, you get the third place. And if you match all 4, you get the jackpot. And if we go back to some previous, like even the round before this, I believe in this practice round, I actually won the match 3, which was awesome. That was really fun. And I mean, if you do manage to get that, it costs you 10 VYFI, and you could win 1,840 VYFI if you match 3. In that case, it would have been 3,496 if we matched all of them. And every week, whatever doesn't get 1 rolls into the next one. Here, last week, we didn't have 1 or that. Both 3 or 4 matched. So 3 and 4 were rolled into this one here. So that means this one was almost the same size, or about half the size of this one from the start.
That's pretty cool. So this is the very first lottery on Cardano or on blockchain.
Basically, this is going to be the first lottery on the Cardano blockchain, not blockchain.
Okay, so there is an Ethereum lottery?
Absolutely. Also, let me just stop sharing my screen. Pancake do this as well. Their lottery have got lower chances than ours does, of course. But yes, this isn't new to all blockchain, but this is new to our blockchain. It doesn't exist on chain, right? On Cardano. So, whilst it's not necessarily groundbreaking, I think in of itself, it's a really creative implementation for garnering randomness on the blockchain and being able to interpret that and turn it into an actual product. It's definitely a creative implementation, and it's fun. You know, who doesn't enjoy a lottery?
Yeah, dude, my mom loves the lottery. Every time she comes home from work, I hop in the car, we go to the gas station, she picks up a few scratch tickets and a lottery ticket. It's like a religion. And we do it every day.
Absolutely. Same with my mum. Absolutely. Same with my mum. My mum used to always go down and buy lottery tickets, and now I absolutely love scratchy cards. Silly how much I love scratchies. Yeah, we're really excited about that. You know, we've actually got our beta testers playing with it right now. So that's why you saw 9,000 tickets that have been bought at the moment, just because we've got our beta testers that are buying tickets and we're running some dry runs.
Gotcha. Will there be any sort of thought to, I guess, incentivize people to buy it? Because, you know, the more people that try to buy a scratch ticket or whatever, or lottery ticket, you know, the larger it gets,
The
which
larger
then
the prize gets.
incentivizes more, and it kind of exponentially grow.
That's the entire idea of allowing it to roll, right? So our jackpots can roll, and they can get larger as they go on, right? And in doing so, we're hoping that we're going to be able to, you know, get a big jackpot going and get people excited. We don't necessarily we don't want to be paying people to be doing our jackpot, to be participating. What we really want to play with to work out the sweet spot, and this is where we don't know yet, is what's going to be the best price that people are going to engage. So we're starting with, I believe it's 10 VYFI is going to be our first try. That comes out to about $3.50 US a ticket, which isn't the cheapest lottery ticket in the world. It's not the most expensive lottery ticket in the world, but that might be a bit too high for people. We might find that people engage with it more effectively at a lower price point. Maybe people engage with it more effectively at a higher price point where you got a higher prize, right? Maybe it would be best to run two different lotteries. One very cheap that's won once every month, and one that's very expensive that's done like every day, so that you don't win much, but if you do win, you don't have as many participants, but if you do win, you win a large prize.
So with the transaction fees, because it's only what, $2 to $3 roughly, would the transaction fees actually potentially be, you know, kind of close to that? Or
to buy a ticket, whether you're doing one or the maximum amount of tickets, the transaction fee is going to be about 1 Cardano.
Gotcha.
Right? So it's about 35 cents. If you win and you collect your prize, the transaction fee there will be about half a Cardano. Let's say 0.3
Right.
Cardano. It's less. There is a limit there, right? We can't go down to, you know, 10 cents. Like, it doesn't make much sense to have 30% of the ticket price being transaction fee, right? Or even 50% of the transaction price being ticket price being transaction fee. So there is a lower bound there that does make sense. Also, in terms of building up the jackpots and actually making sure that they're big enough for people to want to engage. I don't want to go below 5 VYFI a ticket personally. So that would kind of be my lower bound.
Yeah. So I was thinking about this the other day. You know, there's also this person, I don't know if you know, but like wab.eth is this person from Ethereum who's been coming over to Cardano recently. And one of the tweets that he said was something about, you know, why are there not many developers on Cardano? And it's obviously because there's not many, you know, people who know Haskell and such. So I was wondering, was it hard to find people to help you develop?
Yeah, really hard. That's the biggest challenge on Cardano, right, is development itself. And I don't actually want to use the idea that it's because there aren't many people that know Haskell. There are lots of people that know Haskell. Haskell is the most used language amongst engineers, right? Like, it's, and I'm talking about not necessarily software engineers here. I'm talking about mechanical engineers, you know, hydraulic engineers, anyone that comes from something that requires classical mechanics, you're almost certainly using Haskell. But what makes it hard is Plutus, which is the code base for Cardano, is a very new language. So it's very much like going back to Solidity in 2018, 2019, where you just don't have the experience around yet. So the knowledge or the core knowledge required for people to be able to learn this is there. There's definitely a large pool base to draw from, but the actual experience and how to implement these things isn't yet. And that's where we've been learning with our developers, right? Like, this has been a massive learning experience for all of us. When we first got together and I started talking to an initial group of developers, our initial plan was to have a DEX built in 6 months, this DEX and bar. Here we are a year and a half later, and we're still about 4 months to go. So on 2 levels, one, that's very expensive because you need to keep paying for developers in the meantime, whilst the market is crashing and dying around you, which is so much fun. And at the same time, you also realize just how big and how much work there is to do, which in and of itself is just stressful. You know, like it causes anxiety because at the same time you've got a community behind you that have invested in you and want to see you succeed, but at the same time they're worried about their money, as they have every right to be.
Right.
So it turns into this massive balancing act where you're kind of straddling two lines at all time. It's like, what do we have the technology to bring out now and to implement now, versus we don't want to put our community in danger by having stuff that's not ready yet and wouldn't be functional, but they get very stressed when we're not delivering those things. Yeah, it's fun.
Yeah, definitely one way to put it, right?
Yeah, right. Well, look, I chose this job, so I guess I have to enjoy it.
Yeah, no, there's going to be ups and downs regardless of passion, you know, but always go with your passion, because it helps you to be able to fight through all the stress that's going to come with a job that, you know, you're going to get the same stress from, but at least you want to push on, you know?
That's exactly it, right? And that's the biggest thing I've noticed between, well, no, I've always been I like high stress environments. Like my background is finance, my background is trading floors, brokerage floors. Like anywhere that there's a bit of high intensity, I thrive. So I thrive on that in the first place. But what I find very different now running a business is that in a stock brokerage, for example, I can say someone's being an idiot. Right? If I've got like an investor that's being an idiot and they're sitting, this will mean nothing to you because you're American, but there's a very big utilities company in Australia called Telstra that people hang on to for dear life, regardless of how terrible it's doing on any given week, which is almost always terribly. And as a stockbroker, if someone says to you, no, I'm never getting rid of my Telstra. I love my Telstra stocks. I never want to get rid of them. You look at them and say, well, you, sir, are an idiot. Please find a new stockbroker because I don't want to work with you anymore. Fuck off. You can keep that, right? But you can say that at a stock brokerage. If anything, the lead stockbroker or the guy that runs the floor is going to come to you, pat you on the shoulder and say, good job, mate. He was a fucking idiot. Right?
Yeah.
When you run a business, you can't treat investors and people that engage in that manner. You always have to treat them with the utmost professionalism, and you always have to try and be open and honest with them as you can, particularly when you're dealing with their money. And I don't want to say this rudely because it's definitely not meant rudely. I love all of my community and they're all fantastic. But there have definitely been moments where I wish I could turn around and just say, you're a fucking idiot.
Right. I'm sure we've all had that moment in multiple scenarios of life.
Yeah. Right. And that's just something, that's a power I don't hold anymore. That's something I can't do anymore. Which is fine. That's fine. But that is something I miss about working in industry.
Yeah. I think because it doesn't come from a place of negativity, right? Like you're telling that guy that he's an idiot to help him and to help the company, right? And it's just more fun to say it that way, you know,
yes,
in the environment. So
and it's a lot more, it relieves some pressure and stress off of yourself. And you see it in chefs all the time, you know, if you've ever worked in a kitchen. It's actually not because it's not because they're rude pricks. A lot of them are really nice, right? It's just because when you're in that high stress environment, that behavior does reduce your stress level, right? It might heighten everyone else's stress level, but if you're surrounded in an environment where everyone is focused, everyone is in the moment, you're all performing to a very high degree, any one of them, if you interrupt them or what they're doing, are going to crack the shits a little, right? You're in a state of focus and you're in a state of, this is what I'm doing, this is what I need to get done. You know, like when you're staring at the markets, if you go into a trading floor when the market's moving 10% in a day, and you go up to a trade and you go, oh, hey, mate, how you going today? They're going to turn around and say, fuck off, mate. What are you doing? I'm trying to fucking trade here.
Yep.
Right? And then they're going to be back into their screens. And I think it comes from any environment that's got a high level of pressure and passion. You get that behavior set, right? And it's definitely a behavior set that I'm susceptible to. But at the same time, it's an environment I enjoy, right?
Yeah, for sure. You know, I've worked in restaurants before, and I've been on both ends. You know, I've been the new guy that the guy's like, why the heck did you come to work like exhausted? Like, we need to get this. And I'm just like, dude, you're taking this way too serious. You know, and then I've, you know, gotten better and worked with people who are really slow. And I'm just like, dude, it's not hard. Why aren't you doing this? You know?
And I've even been the guy screwing it up, you know?
Same,
it's just,
yeah.
Absolutely. And it's that emotion is something you need to harness more than anything, right? If you can... and I guess it's a sliding scale, right? And this is what you were saying, when you find something you're passionate about, hold on to it and roll with it. When you find something that you're passionate about, it is going to give you negative emotion. Passion is a very positive thing but it's not always a positive emotion. Like emotionally speaking, it's not. It can lead to obsession. It can lead to one-mindedness. Like you can't think about anything else. It can lead to isolation. It can lead to a whole host of things. That's all part and parcel of the experience. Love it. Right? Love all of it.
Yeah, 100%. I am definitely one of those people that finds like a passion and then goes all in on it for far too long. And then I'm just like, jump back and forth. I have a hard time trying to like balance multiple passions because it's usually my passion is thrown all in one passion.
Absolutely. I'm the exact same. Right. And I think that's a good thing. You find something that you're passionate about and you do stuff. And it's all about finding stuff that you'll do. And I was very fortunate. I was fortunate enough to be into crypto from 2017. I was fortunate enough my study background is physics. And then I spent 6-7 years working in finance. So that really gave me a really good foundation to understand this stuff, both from a conceptual level, from a practical level, having used these instruments in classic finance, to be able to, I guess, hopefully do something of use for the world through it, right? And that's where I'm drawing my inspiration at the moment, is that every day I feel like, what I'm doing will hopefully be able to help people engage in a financial system that has isolated them up until this point.
Yeah. And like you're building what you're building, and other people are going to be able to look at it. And even if your project isn't the best of the best, somebody will see that, realize it, and be able to build off of what you built.
And that's what makes crypto such a constructive process. And that's something I like about crypto. It's very similar to science in that sense. It's a lot more congeniality in particularly Cardano. Cardano is very good for it, but we're not enemies. I'm not enemies with MinSwap. I'm not enemies with Wing Riders. I'm not enemies with Sunday Swap. Quite the opposite. I'm about to. I'll say that announcement for later. It's coming up later on today. But I'm about to announce that I'm working on a project with Pi Lanningham and with Dwayne Cameron from Liquid. We're working together on Atrium. All these projects, we're all dealing with the same technical problems. And we work better together than we do separately, trying to each climb our own little mountains, right? Because we're all climbing the same mountain. We may as well work together climbing it.
Right. Yeah, I think one of the common ones that I think about is JPEG Store and Epoch.art, and as well as some of the other, marketplaces that are being built. It does seem like there is a lot of competition. It's somewhat healthy, I think, because everybody wants to be top dog. But, I think there has to be some sort of realization that, there isn't necessarily going to be a top dog forever. Like CNFT.io probably didn't think it would ever be dethroned. And then out of nowhere, boom, it's hardly used. And now, Epoch.art is developing. And I think JPEG stores, probably like, oh, we're fine, like we're going to win. And they're they're in a prime position to win. But Epoch.art, it could very well be the next one that comes out of nowhere.
Do you know who else was in a prime position to win? IBM. That didn't work out very well for them. I can think of 1,000 companies in technology that were in a prime position to win. Like,
True. It's true.
The thing about technology is that development happens fast, and by the time it's come, you've already missed the boat. Another great example of that, Blockbuster. Look at Blockbuster and Netflix. So many cases.
I really think Blockbuster needed to adapt, and it was like the only thing that they were changing was they added video games to their rentals. Netflix changed the game as far as streaming services, and as soon as that happened, Blockbuster needed to pivot immediately, and they didn't.
And they just didn't. No, they didn't pivot at all. Like, they basically ignored the internet.
Right.
And then when they did bring in the internet, they just brought in the exact same service that Netflix had for more expensive. Like, just didn't make sense. Thinking they'd be able to ride on the coattail of their existing customers because their existing customers care, right? Like, no.
And Netflix did what Blockbuster did too, as well as streaming. You can still, to this day, get DVDs sent to you through Netflix, and then you send them back. I don't know why you would, but you could.
You can. It's there, right? Yeah, it's always good to pay homage to your beginnings, isn't it? And in that sense, though, there's still one Blockbuster store, which I do love, being left open as a relic. I'm not quite sure where in America, but somewhere. But it's that exact story, but in a much smaller scale, of course. But crypto is essentially an endless process of that, right? You have small little cryptocurrencies that do something, that something blows up. It might not necessarily be a perfect process, so someone else comes along, improves on it, that blows up, until hopefully we're eventually going to get to a point where the ecosystem is fleshed out and completely engageable for most of the world, because each one of those iterative processes ideally result in improvement. That's the idea, right? Still a long way to go. Cryptos, there's still a lot of work that needs to be put into it. At the moment, I very much see crypto as filling the niche of, or filling the position of a niche financial product. And niche financial products have got heaps of, it's a big market, don't get me wrong. Like the UK US interest rate swap is a niche financial instrument, and it's got about $400 billion a day in liquidity. Niche financial instruments can still be very well utilized, right? But they're not generally going to fundamentally change the way in which we live our lives, right? Your life isn't changed by the Libor. Your life isn't fundamentally changed by the bat swap, right? All these niche financial instruments that exist, they don't impact your day-to-day livings very much. Crypto sits in this position where not only is it a niche financial instrument, but it holds the capacity and the technology to really fundamentally allow us to rethink and restructure the way in which our world exists. Oh God, let's not go into politics here. Let's just call myself a crypto anarchist. Yeah, there we go. Let's keep it generalist. Let's not go into subcategories of it. I'm a bit of a crypto anarchist, right? So by crypto anarchy, I don't mean I don't think we should have governmental structures. Of course, I believe we should have governmental structures. I even am a fan of regulation, right? I think the cryptocurrency markets lack regulation. But I do believe that it would be a lot fairer and a lot more open if government functions were run on the blockchain, right? And that's what I mean by crypto anarchy. We tear down the existing information structures of the government and we replace those information structures with blockchain so that it becomes completely auditable by the people.
So something like voting, passports, that sort of thing?
Not only, I'm talking everything from budget. When the government does budget and then says we're going to give $300 billion to healthcare, that's great for you. That's great for you to tell me, but how do I know that you're not sending $4.5 billion to a company that's run by your, wife's brother, right? And he's the CEO of a company that's a second-rate supplier of needles, right? But you're going to give it to the second-rate supplier because they're related to your family.
Right.
All these things that are really hidden in power structures, essentially, nepotism and favoritism, we can actually make these things visible through blockchain, right? And when you start to look at how those in power behave, it's like, look, I don't necessarily believe in the revolution, but I think we are overdue for one.
It'll come at some point.
Just sucks that I'm going to get my head chopped off for it because I'm definitely not falling on the right side, I'll tell you what.
So we have the Vasil hard fork coming up, and I wanted to know, is that exciting to you in any way? Is that going to allow you to do things that maybe you were waiting to build on?
Yeah, it is. It's allowing us to simplify our data structures, and it's streamlining our production process for our decks. It's going to be reducing the fees to engage with what's already on our site by 10 or 20%. And it's going to make, hopefully, there'll be less of an issue with waiting for your transaction to go through. So that'll improve user experience. So UI should be improved. UX, should be improved. So yeah, I'd say that it is pretty important. This is probably the biggest one we've had in a while. Probably the biggest one we've had, since smart contracts were launched. It's going to allow us essentially to launch our next smart contracts, which are going to be the Vasil Ready token and NFT staking.
Nice. And with Vasil being kind of delayed, do you think that the Hydra upgrade will also be delayed? And do you think, or is there anything that you've been waiting to build for Hydra to come out to? Because Hydra is kind of like what everybody thinks is going to be the craziest upgrade. Like everything will be, split second fast, maybe an exaggeration, but that's what people have in their mind.
Let's go through. We were doing a lot of work with the Hydra team to try and work out where to integrate VYFI into Hydra. And the design of Hydra doesn't really assist with a DEX. Right? It's just not really something that comes useful for us. What Hydra is, let's first describe this. Hydra comes in two parts. You've got the Hydra head and the Hydra tail. But let's focus on the Hydra head because that's what everyone's really referring to when they're talking about Hydra. The Hydra head is kind of its own independent blockchain that does a whole bunch of its own transactions between itself on its own network. And then these private transactions can be sent to the Cardano blockchain to be stored on the Cardano blockchain. You can't just engage with a site you won't be able to just engage with a site that has a Hydra head just by going to the site and connecting your NAMI, for example. You'll actually they'll need to introduce a setting much like in MetaMask, whereby you set a blockchain and then you connect to that Hydra head, and then you can run transactions on that head, right? And then whilst you're running transactions on that head, they get beamed back to the chain. And then when you want to go back to the main chain, you go back to the main chain, right? So it's like having a sub chain that sits off of Cardano and beams that back to Cardano.
Saying the way that that works is that it basically points to a reference of the transaction that happened, and it's still being stored on Hydra's end. It's not actually being stored on Cardano's end, correct?
Correct. That's absolutely correct, right? So it saves a lot of issues with data storage. It saves a lot of issues with scalability because you can take a lot of those transactions off of the main chain. It solves a lot of issues, right? We're still not 100% sure how it's going to be implemented, I guess is the clearest way to say it. Okay. So I'm also doing some work with a lot of people, the Hydra team, with my engineers, with another group of engineers. There's like 5 people involved. A product that allows for fee splitting on Cardano, right? And fee splitting is a perfect app that would be able to take advantage of a Hydra head, right? Because you essentially get a dApp. That dApp's only connected to the Hydra head. You could even do it as a phone app that is just automatically connected to that Hydra head. And then anytime you send money to any user that you have on that pay splitting bill, it's being done on that head. And then you're able to do it entirely independently, right? That's an example of an app that would be good for implementing within a Hydra head. How these apps are going to be implemented into Hydra, and this is where I find it's a bit tougher in Cardano, right? It's going to be very interesting to see how these develop. But like anything in Cardano, it's not an instantaneous process, right? It's not going to be Hydra launches and boom, there's 15 projects that, integrated with Hydra, ready to go, and it's going to fundamentally change the way that we view the blockchain. That's going to be the same case with Vassal, right? Vassal is going to happen, and then not much is going to change, right? Immediately, there isn't going to be a whole heap that's going to change. What's going to change is that a lot of projects are going to be able to start really pushing out production. So you're going to see that change in 3 to 6 months' time, when I believe the ecosystem is really going to start coming alive. But immediately, just like with Hydra, don't expect this sort of like launch and then some fundamental shift. That's not what they're going to be like.
Right. Like even with the merge from Ethereum to Ethereum proof of stake, it did not make Ethereum faster. It did not make Ethereum cheaper. But what it did do is it made it 99% more efficient, because now you're not using graphics cards to destroy the world or whatever.
Yes, absolutely. And that's a fantastic first step, right? And that's something I found really funny about the Ethereum merge, is that all of a sudden we always felt like we were Ethereum's little brother. And now Ethereum does the merge. All of a sudden I feel like we're not only their big brother, but we're their mentor. It's like, come here, young one, sit down. Let me tell you what you need to do next.
Yeah, I wonder how ETH maxis would feel about that.
Oh, man, I know. But that's why I think we're actually seeing quite a few people that are coming over to Cardano now.
Yeah,
right?
I agree.
They're like, Ethereum has done this merge, and then all of a sudden someone's like, wow, this is as shit as Ethereum already was, but now it's just trying to be the same thing as Cardano. Why don't we just go to the one that's already doing it?
Yeah, it is really ridiculous sometimes when you really think about it.
They're all really important upgrades, and they're all going to be bringing a lot to the blockchain, but it's not going to be an instantaneous change. They're done in steps, and then we need to learn how to use them appropriately.
I wanted to ask too, because I love trading. I'm not a good trader, but I love trading. And, we are in this bear market. I've noticed it as far as like my YouTube views, as far as my Cardano NFTs to some degree, and definitely my stocks. They have tanked. But how do you feel about that? Has that affected anything with VYFI? And do you know anything or have any opinions about when we could potentially see this, coming to an end?
I've got so many opinions. I don't know if any of them are useful, but they're there. Okay, so we'll start with the beginning one there, which is we've come to a bear market, and, how do I deal with that from a VYFI perspective? That comes from hedging, it comes from asset management, and it comes from a lot of work. At all points in time, managing a cryptocurrency, you're dealing with lots of assets that are denominated in lots of different forms. And you need to manage those assets appropriately so that you're not losing all your money to the assets themselves. The second part to that is there are a lot of difficulties, right? On a personal perspective, from managing the markets, like the high stress load there is when you've got employees. and I'm not just trading for myself anymore. If I'm not able to manage assets effectively, I might have people that lose a job, right? That in itself is a layer of stress.
Yeah.
But there's definitely, I would say, one of the best parts of the bear market is the quieting down of that white noise. And I'm sure you've noticed that as an influencer, and it's probably a lot worse for your industry as an influencer, right? And it's always better to have more money. But assuming that you're capitalized, it's a really good time to just focus on getting your job done. No one's really rushing us at the moment. No one's saying, hey, we need this now. Hey, why haven't you brought out this product? When's your deck's coming? Why haven't you done this? Why haven't you done that? You said you were going to do this 20 minutes ago and why isn't it done within 20 minutes? I listened to a space yesterday and you said you're going to bring out a new product. Why isn't it out yet? Like, that dies down a lot. And that really allows you to sort of focus in on what you're doing. The other really good thing about bear markets is that bear markets are a make and break time. Fortunes are made and lost in bear markets. It's not all doom and gloom. Like, it is often doom and gloom. Service providers die during bear markets, right? People that haven't optimized their work process or haven't optimized whatever it is that they're doing within the market die. Why? Because only the leanest and efficient operation survives a bear. What does that mean, though? And here's the flip side to that. A lot of the client base dies as well, right? That's why the industries go. But when the world starts going again, all of a sudden you've got vacuums in the market. You've got printers that, because a third of the printers in the city have gone out of business, and now that there's new businesses coming up, a lot of people need printing and there isn't much printing available because they all just went out of business. So what does that create? Opportunity. So if you reverse your thinking from the bear market as being a time of doom and gloom, and instead you put it in the perspective of where are gaps being made in the market now that I'm going to be able to take advantage of, then you can position yourself in a very strong way. An example of that would be with food commodities and energy commodities, right? Not that anyone knew that the war with Russia was coming, but the food scarcity with the logistics chain issue was nothing to be too surprised in, right? I purchased some food futures, a bundle of them. I did wheat, I did soy, I did one other thing. I can't remember the other thing. Something really random.
How long ago did you get them?
About 1.5 years ago.
Oh, so you're doing well.
Yeah, I've been holding them, right?
Because wheat's going kind of crazy right now.
Yeah, absolutely. And I've just been rolling them, right? I never let it expire. Then we've got the other one, which I'm looking at doing at the moment, is olive oil, right? Because of the drought that's going on in Europe right now, Spain's olive production has reduced by 50-60%.
Ooh.
And Spain produces something along the lines of 40% of the world's olive oil. So now if you suddenly got a production glut of 10% of the world's olive oil, what's going to happen to the price of olive oil? Well, I'm betting that it's going to go up, right? Now, again, not financial advice. I'm not saying go off to the Madrid Futures Exchange and try and figure out how you can buy olive oil futures, right? But what I'm saying is that if you look at markets and you look at the state of the economy and the state of different industries and you look at what they're doing, you can set yourself up to win down the line, even if you're not winning right now. So with a change of mindset, a bear market can go from a period of doom and gloom to a period of opportunity. That's a lot harder to say when you've lost your job and you can no longer make rent and you can no longer buy food. All right?
Right.
I'm downplaying those stories in this, right? Not everyone is privileged enough to have the circumstance to be able to look at global markets and think, how am I going to be able to take advantage of this situation? If you've got an entrepreneurial spirit and you really want to start your own business, I started this business with $4,000, right? VYFI came from nothing. It really was entirely done by bootstrapping, me trading, a lot of work. The opportunity exists right now in many industries to start doing stuff for yourself.
I also want to add to that, I've been thinking too, during the bull market, everybody sees, Bitcoin go up like 2%, 3% every day, day after day. And after a few months, you see it like doubled even. And you're just like, wow. And then you get to certain levels where it's like, well, is Bitcoin really going to double again? And so everybody tries to make their money in altcoins and all these other things because you can't, quote unquote, double your money. Well, in a bear market, you don't have to be looking for all these altcoins that are super low. You can, if you want to. And yes, if you're right, you'll make exponentially more than what I'm about to say. But you don't have to be super intelligent. You can just put your money into Bitcoin and Ethereum while they're super low, and over the course of years, you will be up exponentially.
Just ease in, right? And this is a perfect opportunity to DCA in projects that you missed out on, and that's what's so great. And even now with Bitcoin, where's Bitcoin today? I actually haven't looked in the last few hours.
I think it's at 19.
Yeah, 19 basically. Like we're still very close to where we were back at the end of the first bull run in 2017.
Yeah.
And we've got more market capitalization than we did back at the first bull run in 2017. That wasn't the first bull run, back in the bull run of 2017. And what's really interesting, so the bull run in 2017, we got to 21,000, I believe, or maybe 22. So what that means is that we've actually got more money in the market, in the crypto markets right now, than we did at the peak of the euphoria in 2017, right? You've got peaks and troughs, but when we get back to the trough of this market, we're still at the peak of the last peak. And that does, if you bought a Bitcoin back in 2016, you've still had a 200% growth in, even after all of this, and you've just held and done nothing. Still at this point here, you've had 200% growth in 7 years. 200% in 7 years is very good.
Yeah, if you're comparing it to stock markets, if you're comparing it to degenerate crypto gains, you're probably like, oh, that's nothing. But
it's really interesting, and this goes to a totally different discussion for a moment, but I think it's really pertinent. Our parents were brought up in a really weird blip in macroeconomics, whereby wage growth from the 70s to the end of the 90s, even the 60s to the end of the 90s, was larger than asset growth. So that meant that by going to work for 10 years, at the end of it, you were earning more money than if you'd put money in the stock market. And that's why a lot of people from our parents' generation view investing as a gambling game and view investing as something for people that, don't understand how to make money, quote unquote. It's like, no, the best way to make money is to go out and work. But that's not the case anymore. That paradigm has actually never been the case in human history. The best way to make money in the medieval days was not to be a peasant working, it was to be the Lord taking all their money. Right? Now, that essentially hasn't changed, unfortunately. I wish it had. It's feudalism with extra steps. We essentially have a system that's more equitable, yes, because there's more opportunity, but it's still essentially a feudal system where a few at the top get all the money given to them. What you want to be to have the opportunity to make money is you want to get yourself on the right side of that. You're not the person getting paid to produce wealth for someone else. You're the person who's earning the money from the production that someone else makes. God, a communist would hate me right now. Which is not necessarily good, but it's true. That's the best way to make money. You take advantage of others' labor. You don't labor yourself. Let's not get into philosophy or politics here. Let's just say that's how I see it. And our parents live in a time where that wasn't true, which is why it's very difficult to engage our parents with investing and engage our parents. And a lot of people in that generation just don't really want to touch stock markets or don't want to touch these investment instruments. Maybe it's because of fear of understanding, but it's also very much in large part because they will call you a lazy bastard for sitting in your room trading all day. Why aren't you out working? Well, I am working. No, you're not. You're gambling. And it's like, but I'm not gambling. I'm trying to learn how to make money. I went through that argument with my mother, not so much my father. He was a statistician, so he understood at least the numbers of what I was doing.
Yeah, I'm kind of in that argument with my parents. It's a very healthy argument. They're letting me do my thing, but we're finding some common ground where I'm even like, you know what? I'm actually going to look for a part-time job. I know that it's not like the way to make money, but during the bear market, I would love to have some extra money to throw into these assets so that I can quit this part-time job in a year or two.
That's it. And I do want to add to all this. I also worked for years and years and years. Like, I would say the best way to start your own business is by working and gaining the skills that are required to run your own business. You don't, unless you're born rich, which unfortunately for most of us isn't the case. I wish I was born rich. God, that would have made my life easier. But anyway, so unless you're born rich, you essentially need to become a professional, right? The best way to create value for yourself is to become niche, right? Is to have a very niche skill set that people can take advantage of. The more niche, generally the better. And the way you do that isn't by complaining about the fact that you're poor. It's by going out there and gaining that skill set and working, right? So taking the time to do what you're doing, trading, talking to crypto projects, going out there and learning how these markets work. That's how you learn these things, right? And whilst it's not always quantifiable what you learn, you gain the experience that allows you to navigate it better and better and better moving forwards. Every day you get better.
100%. And that's the faith that keeps me going. I've lost a decent bit of money in trading options, and trading options is not the way to go. And I would even recommend people not do that, but it's something I really value. I like it. And I have seen, if I look at my chart, I have lost money in the grand scheme of my short-term trading, but it's evened out in the last year, where I'm no longer losing money. I'm just not making money. So even though I don't feel like a better trader, I'm not seeing any results, I'm not losing money anymore. So I feel like another year, maybe 2 years, I don't know how long it's going to take me, it's going to start to trend back up, just like the market goes down.
That's the first step. And I started my adventure working at a hedge fund by working as a poker player, right? And I always say this to people that want to start learning how to play poker. The first step to playing poker, before you start worrying about making money, right? Sit down at a poker table for 100 blinds and don't lose money. When you can come back to me after 100 blinds and you can say, do that with confidence that you won't lose money, that's when we can start to learn how to take advantages and how to make money. But until you have that basic risk management down, it's going to be very difficult for you to find your niche. It's going to be very difficult for you to find, where can I take my advantage? Because you can't even manage your own money to keep it on the table, let alone make money. Right? So exactly what you're saying is, that sounds to me exactly like the process you want to be going through as a trader. First, you lose your money. That's the cost of education. Then you stop losing money and you start not making money, but you're ending about even. And you're like, Jesus, how do I start making money now? And then you need to push to make it to that next level where you start making money.
Yeah. I feel like for me, and I appreciate you saying that, because I wasn't sure, when you see you're a year and a half just flat, you're just like, am I doing anything? But yeah,
if you're flat in this market, I would say you're doing well.
Yeah. Well, I have a few accounts. So my short-term trading account is flat, but my long-term trading account is, it's up, but it's down during the bear market, but overall still up. Like you said, if you invested a lot in 2017, 16, even in the worst scenario right now, you'd still be up.
Yeah, exactly. So, right. But that's exactly what you want, right? And just keep practicing. The only thing that I can really say, again, not financial advice to anybody, is use less technical analysis if you're really big on the technical analysis. So that's the only.
All I do is I look at resistance levels, and that's about it.
Yeah, that's about all you need. RSI is good. I found I was a real technical trader for years and years and years, and I loved it. I really frothed technicals. I would sit there doing Gann fans, doing Elliott waves, all this bullshit. And I shouldn't say that. Some people are going to put negative comments if they listen to that. But what I definitely found was that when I started looking at the market holistically, and I started thinking the market not from the perspective of, I guess, maths, but from the perspective of human emotion, that's when it really clicked for me. Because the market is an amalgamation of human emotion. It's not logic. And to try and approach it using logic often lead you astray, because you're trying to use logic to explain emotions, and that doesn't really work.
Which is really hard, though, during the bear market, because all of their emotions are valid. You know what I mean? There are a bunch of bad things in China, in Europe, with our energy, with gas prices, with rates going up and people not being able to afford R&D loans and such as that. Mm-hmm. So all of these people's fears are valid, but the stock market is always forward thinking. So at what point are we starting to predict better, And you won't know until the market knows.
I can give you a brief idea now. Let me just pull up my favorite instrument in the world, the Treasury yield curve, US yield curve, US Treasury yield curve. So according to the current yield curve, it thinks that we are going to have the Jesus, that's gone up. They think the interest rate is going to reach 4% in 1 year. And then
Yeah.
after 1 year is when we started to get an ease off of interest rates raises. That's the current opinion of the market. That can change, of course. So that means that we won't reach a state of monetary expansion until at least a year's time, is the current opinion of the market.
Right. And I know that the Fed had originally said during March of 2023 was when they wanted to stop raising rates. However, they said that before they saw the last CPI report, which everybody was bullish on, and it came back garbage. So now everybody's kind of like, oh, crap. And
to be fair, they were bullish because the CPI report before that came out really well. So
right. And they were predicting this to be a 2 month in a row good CPI report. And if that was the case, then that could have been a reason for Powell to stop raising rates at the rate that he was.
And that would have really have boosted the crypto markets. I was hoping for that. And we saw that 2 months ago with the first one, right? When we had that good report, and we basically instantly saw Bitcoin punch the 24K within a week. It was glorious. We can finally stop doing our fiscal contraction, and we can start to actually look at investing again, start to look at where we can find advantages and make money. You know, lo and behold, that's not how the cookie crumbled.
Yeah. Well, I know that you need to get to another interview, so I really appreciate you coming on, man. If there's anything else you want to say before you head out.
I just want to say, look, we spoke about a lot here today, and I thoroughly enjoyed myself. So thank you for having me on, first of all. If you ever want to have me on again to maybe chat about trading, or it can just be microeconomics, it doesn't necessarily have to be about VYFI. I'm always happy to come on and have a chat. Or if you're having like a panel discussion, please invite me. I'm always happy to come have a chat. Whereas I would also like to add to anyone who doesn't know, please go to app.vyfi.io. That's our website. That's our DApp. You can already go and have a play with it. And check us out. Definitely follow us on Twitter, follow us on Telegram, and definitely come and have a chat to us on any of our socials. We've got our lottery contract, as we were talking about before, launching very soon. And we've also got our next NFT and token vaults that are coming in with the Vassal contracts launching very soon. Oh, that happens once in a while when data needs to refresh. Essentially, don't be scared to ask any questions about us. You know, we're a pretty deep, comprehensive DeFi ecosystem. We're not a simple one, though we are trying to make it as simple as possible to use, of course. So it's easy to engage, but it might be a bit hard to understand all of it. Don't be scared about asking us any questions. We're always here to help.
Yep. And if any of you guys do want to find them, I will have all their socials in the description below. So I appreciate you again for coming on, man. And remember, everybody, get outside, see your family, see your friends. We're here to make more money so that we can spend more time with them. Until next time, guys. Peace.
See you guys.